Hey, welcome back. In my last video, I did buy, sell, or hold on Apple, Nvidia, and Tesla. And I had a lot of requests to do some of the other very actively traded stocks. So today we're going to look at Netflix, Microsoft, and Amazon. Now, buy, sell, or hold, that question depends a lot on the time frame that you trade. So I'll try to look at each of those stocks on different time frames. If you're a long-term investor, it's a very different answer than if you're a short-term swing trader, for example. So we'll look at those in different levels. Also, last video, I talked about how these stocks create a good deal of deception, or I said I was going to talk about that and I forgot. So this video, I'm going to show you what is deceptive about these stocks and how they influence the overall market. All right, so on screen here, you can see the Netflix chart. And this is actually a short-term chart, looking back just 30 days, 120 minutes. And there's two instances where I like to buy stocks. I like to buy stocks when they either break from low volatility, which means sideways trading. So they're going sideways, they're quiet, and then they come alive with some abnormal activity. That's reason to buy number one. Reason to buy number two is when a stock is in an upward trend, it pulls back and it breaks a pullback. So if we look at the chart here of Netflix, and we'll just bring my drawing tools in here. So you can see that Netflix was in this sideways range through the middle of May, and it broke out on May 20th. And that started this little move. And then you have another break from low volatility here. So you can see the market's going sideways and it breaks. Now, what does it mean when a market's going sideways? It essentially means that the buyers and sellers have come to some consensus, they agree about what the stock is worth. And since we know that fundamentals and information drive stock price in the long run, anytime the buyers and sellers agree about value, it means that when you break from those sideways trading ranges, it implies some new information is coming into the market, maybe a shift in psychology, and that warrants the next leg of the upward trend. And that's why I love to see these breaks from low volatility. So those were two short-term buy signals in Netflix, the last one 3 days ago. Now, the other reason that I will buy a stock is if it's in an upward trend, as this stock is, I love it when they pull back from highs and then break the pullback. And so those were happening a couple of times on Netflix. You have it here, you had it there, and sort of a little bit here again on that break. So sometimes you can have a break from low volatility, but also a break from a pullback. So what we see in the Netflix chart is that we had a couple of buy signals within the last month. Now, I would not buy it now as a swing trader because it's already made some pretty good gains over the last 3 days. And so you then want to wait for the next pullback. But before you do that, let me show you the longer term time frame, because that's where we're going to see a little bit of a problem. So I'm going to just click on the 3-year time frame. Now, this is a weekly chart. And you can see that Netflix has been in this great upward trend for a while. It broke the downward trend line here. It built a rising bottom and then broke from the rising bottom in October of 2022. So that was buy point number one if you're a long-term investor. And then if we think about pullback breaks, we had another pullback here and a break. We had a pullback here and a break. We had a breakout from low volatility there. So there have been a number of times to buy this stock over the last year and a half. The problem now is that the stock is coming into its highs there at $700. Simple rule in chart analysis is when markets rally into these major areas of resistance, they're likely to get stuck at that resistance. And so it's likely that Netflix will at least stop going up. It doesn't necessarily mean it's going to go down, but it's likely that it will stop going up in around that $700 mark. I don't see a reason to sell this stock unless it breaks its upward trend line. So if you are a long-term investor, you're trading, for hold periods of months or years, you just draw a trend line across those bottoms, and until that's broken from a falling top, it remains a hold. If you're a shorter term trader, we could go to the 1 month 60-minute chart, and similar concept. If I draw a trend line across those bottoms, that's my upward trend line. If I were to break down from a falling top, then that's an indication that it's time to sell. So on Netflix for now, it's a hold. Now remember, I'm not a licensed investment advisor. I've been trading the stock market for over 30 years. I'm pretty good at reading charts, but do your own due diligence, make your own decisions. I'm doing this to teach you how to read charts, not as investment advice. All right, let's move along to Mr. Softy, Microsoft. And there, the long-term chart, so we're starting with the 3-year weekly now, is in an upward trend. It broke from some sideways trading last week. And so it's actually not bad as a buy. It's in this long-term upward trend. It is perhaps a little late in the trend, but it's not a trend that has gone parabolic. If you recall my video on NVIDIA, which I did a couple of days ago, and again, check the Stockscores YouTube channel for that video where I looked at NVIDIA and Apple and Tesla. On NVIDIA's chart, it's gone parabolic to the upside, which makes it very risky for a correction. Well, we don't see that in the Microsoft chart because the trend here is linear. I can draw a line across those bottoms. It's a linear trend, which means the buyers are in control. It's a strong stock. Now, we had a reversal of trend around the same time as Netflix back in early spring of 2023. And then we had a pullback break right there in late October of 2023. And we've been continuing higher since. Now, we went sideways here for 3 or 4 months and just broke out last week. So that's a soft buy. I don't call it a screaming buy because, again, you're coming in late. But the stock has great upward momentum. There's no reason to exit unless we break some trend lines. Now, I've drawn the trend line there on the weekly chart. How does it look in the short term? Well, we can go to a daily chart first. And so I'm going to go 6-month daily. And there you can see I'm building optimism. The bottoms are rising. Okay. Or I can go to the very short-term chart, the 1-month, 60-minute chart. And again, draw a trend line. It looks something like this. I'm in that upward trend. So if you're a swing trader, sell if we build a falling top and break that upward trend line. If you're a long-term investor, then watch that 3-year weekly chart. All right, the last one I'm going to look at today is Amazon, and I'd love to hear from you. Do you like these kind of analysis? If you would like me to do more of this, let me know some stocks you'd like me to follow. You can leave those in the comments, and make sure you're subscribed to the channel because you'll get quick updates when I upload a new video. I'm trying to do them 4 or 5 times a week right now because I think there's a lot of appetite for this kind of analysis. All right, Amazon. Again, strong upward trend. And I promised I was going to talk about how these stocks are deceptive. I'll explain that in just a moment. Amazon's been going sideways for 3 months. So if it were to break to the upside, like Microsoft did last week, then Amazon would be a buy signal. Again, a soft buy signal because it's already up a lot. It's well into the upward trend. You can see the trend reversal. Trends reverse in this fashion. There's a downward trend. They break it, provided that's from a rising bottom. That's a good signal to be a buyer. And then once it's in its upward trend, buy the breaks of pullbacks. So we have this theme that keeps coming up over and over again, 2 types of buy points. And I will try to give you more of these as they happen. Don't see any on these stocks today, Microsoft perhaps last week. Now, at the top of the video and in my last video, I promised that I was going to explain why these stocks create some deception in addition to NVIDIA and Apple. They're deceiving because when we look at a chart of the S&P 500, SPY is the symbol for the ETF, you can see that it's in this very strong upward trend. And so you would think that the stock market is in great shape. Well, the deception is that this index is what's called a market-weighted index. That means the biggest companies have the biggest weighting. NVIDIA is now the biggest company. And look what that stock has done. So that stock has pulled the whole market index higher. If we were to switch the S&P to another symbol, RSP, this is now an equal weighted version of the S&P 500. And you can see that it definitely has not been in this strong trend. In fact, it's been sort of building this pennant pattern for the last little while. The reason, in my mind, is that interest rate expectations remain kind of bearish. In other words, the US Fed doesn't seem likely to lower rates a lot this year. The market was hoping for 4 times in 2024. It might now get 1 and probably only in the fall. And so most stocks are affected by these high interest rates. If you go look at the Russell 2000, it looks more like this index, the RSP, because most stocks are suffering because of high interest rates. And what the deception is these mega cap companies, Apple, Microsoft, Amazon, Nvidia, they are lifting the index because of the market weighted nature of the S&P 500 index. And so that's where the deception is. So there's good action in those large cap stocks. They remain good holds generally, but the broader market is going to need the interest rate picture to change. And so the chart to watch for that is TLT. TLT is the Treasury Bond ETF. If this starts to go up, that means interest rates are going down, or the expectations for interest rates are going down. This is based on the bond market itself. The bond market tends to predict what will happen with the US Fed. It's very good at predicting it. And so if this chart, TLT, starts to move up, what you're going to see likely is a broadening of the strength in the stock market in general, and maybe some profit taking in those large cap stocks. So money will come out of the big high flyers and start to move into the smaller cap stocks, which are much more interest rate sensitive. All right, so I hope you've enjoyed this analysis. If you do, click on the like button. It helps the video get more views. Subscribe to the channel. I'm going to keep pumping them out as long as people keep subscribing. So hope you've enjoyed this video, and trade well.